Hi, this is Dr. T here. Today I'm going to share with you how the global stock market outlooks at the moment for the whole world, USA, Singapore, Hong Kong, and China, especially under the impact of coronavirus. At the same time, I'll do an interesting analysis using technical analysis on coronavirus because some of you probably concerned when this virus spreading may end. Okay, let's go into details. My data is based on the last available data, which is on 20th of February 2020, and I'm updating today, right? Okay, let's proceed with introduction of Dr. T here. If you get to know me for the first time, I have a PhD in the field of computational engineering, right? So I can apply the simulation skill in various areas. Could be in the stock market, could be in engineering, could be even in coronavirus analysis, right? So that's why this technique could be useful, right? Later I'll apply some of those. I have achieved financial freedom a long time ago, and I enjoy sharing the knowledge, right? So during this period of quiet time, I could actually do more video at home to share with you. I have a nickname called EIN55. Okay, there's a reason behind it. You can visit my website ein55.com if you are interested in learning this free investment knowledge, right? Okay, at the same time, you can also drop by my Facebook for further update, right? Okay, let's proceed with our topic today. But before that, just a reminder, um, the sharing is for educational purpose, whether it's a coronavirus analysis or it's a stock analysis. Okay, so you should actually make your own decision, right? Combine with what we've learned from various places, right? Okay, with that understanding, let's proceed from here. Okay, technical analysis. Are you sure applying in coronavirus? Yes, TA or technical analysis is just a way of data analysis using charting and so on. Originally for stock market actually started probably 100 years ago, right? So at that time computer was still not invented, so people have to actually draw on the paper, so it could be very troublesome. So nowadays, with the availability of the computer, right, in fact it becomes much easier. But similar as share prices, there could be a lot of noises. Okay, let's look at the coronavirus case studies here. So as we know, this new virus, right, has been annoying the whole world, right, with the data reported as early on the 22nd of January. So I put this as a day one, right? And then keep track every day, right? Until as of yesterday, the full data received is a day 30 from the 22nd of January. So it means today is actually is the 21st of February, right? Applying which is available data, the latest one on the 20th of February. So in fact, if I do not tell you this is coronavirus cases each day accumulating until today, you probably would think this could be a share price, probably a share price, going up to $90. So that's why there's a common right area between stock analysis and the coronavirus, which we can apply. So for example, right, when you look at the trend here, so the orange color here, this is the cases in Singapore. So we use the right side axis, and then we have a double axis on the left is counting the whole world cases, which is the blue line here, right? So we can see these two are quite aligned. Singapore, a small country with 5.5 million population versus the whole world, 7.7 billion population. But guess what? In fact, both are moving, right, very closely, right, over the last 30 days or so. So in fact, the ratio of of the cases roughly is 1 to the 1000, and this ratio is actually proportional to the population, this ratio as well between Singapore and the whole world. So it means that the reporting data both in Singapore and the whole world, right, could be trusted, although there could be views that probably the data reported may not be reliable. Yes, in terms of the absolute value, there could be changes. For example, in China Hubei, right? So under that condition, right, how can one be sure that the reported data could be as accurate as in Singapore, for example? However, if we assume the deviation, if any, right, is consistent, right, then it's fine. So that's why technical analysis require consistency. So regardless which technique, which method of this data gathering, so the number one consideration, it has to be collected, right, and compiled under the similar kind of condition. For example, the whole world mainly is a 90% probably is based on the China Hubei, right? You can say that, right, the data is consistently collected there. Even is deviated in a consistent way, which is fine, right? So at the same time for Singapore, assuming it's collected in a most stringent way is also okay. Follow the orange color, right? Okay, so but there are few observation, right? Number one, right? In fact, I reported in earlier video that starting from the 5th of February, we see some changes, right? Because the growth rate actually start to become slower. Actually, I did not update the range here, right? This arrow should be up to here, and then the orange color one should starting from here, the slow growth, right? So it means that in fact there's a hidden changing in the rate of increment, but we cannot see clearly over here. So that's why we have to move on to the next slide, because most of us here are interested when the spreading of virus may end, when we come to a peak and then eventually, right, will drop, right, with more recovery cases. When can we say, goodbye to this nightmare? Okay, we look at the next chart. This is looking at the everyday, the new cases added to the total, right? For example, counting from the day 1, 22nd January, every day when there are new cases in Singapore or in the whole world, these cases will be added, right? This is accumulative over here and adding to the total as of today. For example, as of today, Singapore, there are probably 80 plus cases, and then the whole world, right, close to around 70 plus thousand, right? Okay, so now we look at here, because when you look at the second derivative, right, meaning looking at the rate of change, right, then it will be clearer to see the changes. You see initially it moving in a linear way, probably for the first 15 days or so. Then starting from the 15 days, right, in fact, this is a reversal signal, but it was not very clear at the time. It started to actually drop for roughly 7 days. So in fact, I shared my earlier video, right, somewhere here. Okay, but there's one surprise move, right? What happened is there was a change in the reporting, this policy. So from the day 22nd, so what happened is China Hubei decided to use the new method of diagnosis. So overnight, one day, right, the number of cases shoot up more than 10,000, right? It's almost impossible, right? So it means that in fact the transition likely is the same, but because due to two different standards, but this is a one-time adjustment. It actually shoot up. Okay, so basically this is a new diagnosis method, includes even those non-confirmed cases, but likely could be the infected cases, for example from the CT scan and so on, right? So after that one-time adjustment, right, the number of infection, right, daily cases drop down tremendously. again. So it means this is a good sign, right? Despite two different standards applying for the Hubei data, which affect the whole year, right? But we can see the second technique, right, start to actually drop down tremendously, merging with the earlier trend, right? Earlier trend dropped for a week, being disturbed, but then it continued. So luckily, because of that, the technical analysis still can be applied. So we can apply a so-called bilinear model, right? Means uptrend linearly, downtrend linearly, to project this important point. This is a point whereby the number of new cases will be close to zero or very few cases. Of course, for China with so many cases, to be exactly at zero, that will be quite difficult to judge. But we can actually assume the peak can be defined as 95 to 99% of the ultimate peak. So it means the number of cases like here can go up eventually, right? It saturate, but the saturation process may take a long time. But there's a negligible change, probably within like 1 or 2%, right? So that we can actually technically define as a peak. Okay, so a peak may not be like a clear cut absolute zero, means when it hit the day totally no new cases, right? And Singapore and the whole world still follow the 1 to 1000 this relationship even for the daily cases, right? So for example, in Singapore, right, and the whole world, we can draw a support line, meaning Singapore every day 2 cases, and the whole world every day 2000 cases. So as long as the number of cases above 2000 for the whole world, above the 2 cases for the Singapore, it means that likely the virus spreading will continue. Because we apply the technical analysis, means there's a minimum support, right? The support resistance can be drawn by drawing horizontal line like this. Let it pass through as many points as possible. So it's clear that the number of 2 for Singapore, the number of 2000 for the whole world are the one which actually pass through the most often. But there's a good news. Okay, in the last few days, the whole world dropped below the 2000 support, and Singapore, right, also for the first time in so many weeks, right, dropped to 1. Okay, so both are actually below the critical support. So from the stock analysis point of view, right, this is called a bearish signal. Of course, for trader, right, when they usually see this kind of signal, right, either they will sell the stocks or they do shorting. Shorting means when the share price fall down, right, we could actually make money from the falling of prices. But of course, for the coronavirus, we are not going to short at the so-called the data, because we could not actually trade it. But it's for the good of mankind. We just hope the virus spreading will end soon. So that's why assuming the data is reliable, this is a very important assumption. And assuming there's no second wave of infection, because after the Lunar New Year is over, people start to go back to work, right? That could be potential, opportunity for people to get around and then to get infected, getting the second peak, again. But so far so good, right? So technical analysis, all right, will not be able to see the future. Rather, we can actually use existing data to make a decision, right, using calculated risk. So since the signal here is bearish, right, it means that this downtrend could continue. So there's a likelihood a peak may be reached by end of February, right? So when it's reached, doesn't mean it will be totally zero cases. It means there could be still random cases, assuming the control is well. Even those go back to work, they will know how to take care of themselves, not to get too close, and taking care of their personal hygiene and so on, right? So that's why it could be a blessing in disguise. Why I say that? Because in fact, the fatality rate for the coronavirus is not very high, right? Within China, it's probably around 2%, but for the whole world, it's probably like less than 1%. Yeah, so if you compare with a seasonal flu in the USA, could actually kill over 10,000 people a year. So that's why it's even a bigger threat to American, right, compared with this coronavirus. That's why later on when we look at the market outlook for the stock, you see, in fact, US stock do not actually very much due to this Asian crisis for this virus here. Okay, okay, back to here, right? So it means we need to actually update the data, right? With the latest new data, we update to that. So it's the same as a stock trading. You make use of whichever data, assuming this is share prices, right? So every day you get a new data. So you have to just make a decision based on the data you have, right, as of the today, right? And then make a high probability this decision based on the trend, based on the up and down, right? There are a lot of techniques involved. Later I can share further with you. Technical analysis is just one of the main technique, but it's not the only one, right? But for traders, usually they like to apply technical analysis a lot. Okay, so if we combine all this as of today together into this chart here, we can form a life cycle for this coronavirus. Right? In fact, stock market also has a cycle. Virus also has its own cycle. Right? Of course, you know that even one day it go up to peak and end, right? It may actually come back again. It's like same as a seasonal flu, right? Every 6 months, because the whole world every 6 months rotate, north and the southern world, right? Two winters, right? Each winter will come back. Okay, so during winter time, the outbreak start, right, December to July, right, 5th of February, start to see first signal of a slowdown, which is aligned to here, and then at the same time, right, projected to reach a peak by end of February. Remember, projection is not like a certainty. It's not like 100% sure, right? It's just based on the analysis in terms of trend, right, with a higher probability estimation, right? But we will not, for sure say by end of February, 100% you end there. It's not. It's just a probability. For example, we can say that maybe 95 to 99% of cases could actually end by then. However, right, but if there's a one unknown this happening, for example, probably there's a new spreading. In fact, besides Singapore and this China, so you can see the number of cases in Japan and let's say in Taiwan currently are increasing. What if it become uncontrolled? Do you think it's possible? Right? All those could be the so-called the black swan. Right? We have black swan for the financial world. We frightened of it. Same thing, we could have a black swan for the coronavirus. But since the whole world has been alerted, right, due to the China right, misfortune here, so by right, each of the countries should have learned from the lesson, right? So by right, that should not be a black swan anymore. It's a non-threat. So it means by right it's preventable, right? So although we cannot, stop totally, but we can minimize it. All right. So why I say it could be a blessing in disguise, because the seasonal flu could be a higher threat, right? If we could probably out of 100 cases, let's say someone have a sore throat, sneezing and so on, probably 100 cases, probably 99% of those could be just a seasonal flu. Probably 1% could be coronavirus. Let's take it as. But because of their fear, great fear, then people, right, frightened of getting the coronavirus, indirectly preventing, right, the spreading of seasonal flu. So that's why I say it's a blessing in disguise. So in fact, in Singapore, for example, the number of death cases is zero so far, right? But at the same time, there are people, right? There are weaker individual, for example, the elderly, for example, those are weak in this health, right? They may not even able to last through under this normal pneumonia, under this seasonal flu, for example. So that's why, by keeping ourselves, uh, this clean or stay away from the coronavirus, indirectly actually we could prevent other these more deadly viruses, from this further spreading or killing more people. So that's why I'm saying that crisis could become opportunity, right? Same for coronavirus, same for the stock market. Important, we need to learn from the mistake. Learning from mistake, not to mess up with the wildlife. Okay, all these new viruses, right, has been living peacefully with the human for thousands of years. Why bother to eat them, right? We have so much food we can consume. So that's why the whole world, right, need to learn about it. At the same time, right, uh, after this crisis, I believe the whole human, right, the community can become even stronger. Okay, so after reaching a peak, assuming we give another 1 or 2 months, right, because we need to consider the incubation period, right, roughly 14 days or so. There could be some cross infection going on, so there could be a few more cases here and there. So unlikely to be totally zero. Even if zero, you need to actually keep track more than 14 days. Even if 14 days, what if the new cases, from the other country may actually come into the domestic, this community? It's possible. Yeah, because we cannot close the door forever, right? All the countries, we require, right, traveling, right? We require interaction. Although at the moment it may not be a so-called good timing. So that's why sooner or later China still need to go to the whole world. Why? Because China tourists contribute to 1/3 of the spending for the whole world tourism. Look at Singapore. Singapore, 1/3 of the this customer is gone, right? You look at Changi Airport, 1/3 of the this sales, right, from the China tourists is gone. And in fact, China tourists, the this spending power is strong. They can even contribute to 1/2 of the profit of those merchants. So that's why it's impossible to stop all this forever, right? And it's not the rationale to do so. So that's why once the crisis is over, right, life has to be back to normal, right? As long as human have to learn from lesson. Okay, so that's why hopefully, right, by end of the summer, right, summer will start from June, right, because the temperature will be warmer then, right. Last time even SARS, right, without any active cure or vaccine, right, it just ends, right. But we cannot take it for granted, right. So because coronavirus or the COVID-19 is actually more contagious, so we need to actually prevent it, right. So in fact, the best prevention is through, right, for example, our immune system, right. For example, why we do not afraid of the seasonal flu, because we know that the death rate, the fatality is actually quite low, probably 0.05%. So if you think you are stronger than 99% of people, oh sorry, if you are stronger than the 1% of the weaker group, then you're all right. So that's why each of us, our chances of so-called survival is more than 99%. So that's why very few people pay attention to seasonal flu, right? However, right, so if we can actually, right, prepare for all this, right, in fact, including the stock market, we can do better. Why stock market has similarity? Now we move on to the technical. Later on, can talk about a little bit on fundamental. Because for stock investment, the immune system to the health is same as the business fundamental. So that's why you look at the last few months, right? Although it's just a 1-2 months of the health crisis, right? Several sectors, already affected. Right? You look at the Singapore budget 2020, helping these five sectors. Number one, tourism, right? Because people don't travel, right? Then the travel agency could be in trouble, right? Number two, right? The airline, right? So people afraid of flying in an enclosed space like aircraft. So in fact, many airlines, right, stop flying, especially to China, right? So this is a tremendous loss, right? And number three, cruise. Number four, right, land transport, let's say taxi, and all that. Yeah, so related stocks could be affected, right? But likely will be short term, right? But for that particular month, if you have a chance to look at their financial report, right, likely will be affected, right? So that's why stock investing we need to look at the longer period rather than just look at certain month. So that's why budget 2020 government have a different objective. Short term, let's say a few months, right, deal with the needs of coronavirus. At the same time, medium term, right, or the what required for this year, right? What are the additional help required for the restructuring of the economy and so on, and what are the long-term needs, for example, right? So that's why the budget, for the whole country has to be balanced for short term, medium term, and long term. Same thing for the stock market. Later on, we'll look at this three time frame as well. Okay. So yeah, there's one more is the retail business, okay, and also the F&B, food and beverages. Okay, when people frightened of get around, they afraid of going out, going for shopping, going to restaurant to eat or drink. Those business could be affected. Again, could be short term, right? Okay, so we move on to before we talk about the market outlook, let Dr. T share about my investing styles. Okay, the details in future you can learn from Dr. T, the free 4 hours courses, right? Every month I have a free course available for meetup session. Even I have a very low cost online course later I introduce to you. But let's learn the main principle first. Okay, so Dr. T always looking for a giant for investing. Okay, of course a giant doesn't mean the biggest stock. It means a stock with a strong business, right? Even the giant fall down, it can always climb up again, right? So at the same time, right, big doesn't mean it's a giant. You must make sure the internal strength is strong, right? Even a small company can become a giant. But even you buy the giant, right, you could still lose money for the stock investment, for example. Why? Because you may buy at the sky high price. So that's why, for example, right, in the last 1 2 months, right, some giants may be affected, right, and start to actually fall down. But that falling down is not forever, right? Crisis is opportunity if it's a giant, because a giant can always climb up. We are talking about crisis for the share price. Share price fall down, not the business fall down. If the business falling down, that crisis is actually a crisis. Okay, because we want to make sure, right? For example, you buy an apple, $1. That apple, right, today selling you at 50 cents. If it's still the same delicious apple, then it's a good buy, value for money, right? It's a good 50% discount. But if that apple $1, and then what happened is this is rotten inside, totally you cannot eat at all, even selling you at 10 cents, that is not a real good buy, right? So that's why we must, identify opportunity or crisis by focusing on the fundamental. Okay, and eventually a giant will climb up again, right? For example, later on Dr. T will show you, right, the different market conditions, right, after the last 1 2 months. In fact, global stock market is getting stronger, right? So that will become just a temporary correction. Okay, so this is just a three simple approach. The question is, you must know what are the giants to buy. Okay, the whole world, there are probably close to 100,000 stocks, right? But the clear strong giants, there are roughly 1,500 of those, right? Okay, at the same time, they may fall down at different rates. So that's why even you identify what to buy, you need to wait patiently when to buy and when to sell, all aligned to your own unique personality, right? You could be a short-term trader, you could be a long-term investor, right? So there's no one single way to position. Okay, and this is Dr. T quick summary. I have 55 investment styles, you know, developed over my past 20 years of experience. So if you have interest in future, if you have chance to learn it, but in a quick way, just to show you 5 out of my 55 styles. Okay, probably now you can guess where the 55 now coming from. Number one, important style is called value investing, right? Looking at the value using the fundamental analysis FA. So this is analyzing the business. So in fact, Benjamin Graham, right, the father of value investing, right, the teacher of Warren Buffett, proposed this way, right? Because right, if you are supported by a business, right, even crisis come, right, you are not frightened because the company is still making money for you every month, every year, even during crisis. At the same time, share price will move up and down, like just now the coronavirus, up, down. Sometimes could be in an unpredictable way. Just now, the coronavirus is still predictable, right, up and down, but the share price may not be as a clear cut, right? Especially some stocks like penny stocks, right, could be under a lot of influences. Okay, so we need to combine both fundamental and technical analysis together, right? Some of you probably have been trained in either way, but it's insufficient because we need to bridge between fundamental and technical, and we need to control our mind, which is a PA or personal analysis. So our self is our biggest enemy. So why in the past, right, if you invest or trade, if you are not successful, there must be a reason. For example, if you invest, then you worry about the short term, up and down. If you trade, then you don't take action, looking at the this daily data, for example. So that's why there are certain right pitfall right to the possible strategy mismatch to your personality. So this is a gap we want to cross between the fundamental and technical through the PA here. At the same time, the gap between the two, right, telling you about the optimism. In fact, optimism is a measurement between the technical and fundamental. So later I'll show you the application of optimism. And more importantly, right, is to buy low, sell high, right? Buy low, sell high is the secret of making money, right? So simple, everyone knows, but probably this is the most difficult to exactly do it because know what to do, how to know the concept is called qualitative, but exactly how to do it, right, is called quantitative. Where is the low, where's the high? So this is a $1 million question. And sometimes, in fact, if you are doing trading for short term, you could buy high, sell higher. That's say using momentum trading. So that's why there are more than one way to make money. But more importantly, must align to your unique personality, right? For example, are you a short-term trader or are you a long-term investor? Are you investing for dividend? Are you doing crisis investing? Are you investing entire country indices, right? Or are you looking for some undervalued stocks? So there are at least 10 different strategies, right? In future, you can actually learn from Dr. T, the free course. Every month I have a free course on the 10 strategies. The same principle not only for stocks. You can also buy low, sell high for property, for commodity, even for forex, even for Bitcoin, right? Because this universal equation is true. Why is true? Because human, right, by nature cannot control greed and fear. So that's why when it comes to the money, right, in all these areas, right, majority cannot control. So that's why the minority, especially those who are trained, could actually take advantage or leverage on the mass market who may be ignorant. So that's why we need to actually learn, right, as an individual, retail trader, investor, how to overcome this weakness of the personality. Okay, at the same time, need to align to the different levels. Individual stock level one, right? For example, right, if this could be Singapore Airline, right, you need to align to the level two, right, entire airline industry. Are they okay or not? And why is happening? That could be due to the coronavirus, right? So that's why there could be some correction. But at the same time, it's also affected by whole country level three. Singapore stocks affected by this STI, for example, right? At the same time, for Hong Kong, affected by the Hang Seng. So we must know the individual, right, country index. At the same time, we have the whole world, how the whole world stock market behave, right? So that's why the level analysis is also one of the important critical this consideration. So out of 55 styles, to learn all, right, requires time. But a quick one here, there are five quick techniques, right? Level analysis, level 1 to 4. Okay, optimism analysis, later I'll apply in a short while. Fundamental analysis, FA, looking at the business foundation. technical analysis, just now I apply just briefly on the coronavirus. There are much more, probably over 1,000 indicators for TA and PA, which is probably the most important of all. Okay, so with this understanding, right, we probably can move on to more applications. But before that, you need to actually form your own 10 dream team stocks. It means as an investment coach, you need to look for 10 players beside the goalkeeper. This is your cash in bank, right? Your this spare cash, right? You can put in a bank, but bank can only give you 1% interest rate, right? But at the same time, you could let the money work for you by investing the spare cash, right, into 10 this so-called right players for the stocks, defenders, midfielders, and the strikers. Strikers, could be like a crisis stock, right? Could be like short-term trading stocks, right? In the probably a few weeks or few months, okay, come and go. We may not look for any like dividend payment, mainly for the capital gains. So these capital gains we look at usually at least 20% or higher for that kind of quick gains. Okay, at the same time, midfielders, right, could be those looking for a balance of some dividends, like probably 2-3%, at the same time, capital gains. Right, so you can use like undervalue investing strategies, growth investing strategy, and so on. Okay, at the same time, defenders are more defensive. Either you can invest for dividend or can invest in those like ETF or indices of country, right? Why? Because the defenders here could pay you like REITs, can pay you. We are talking about strong REITs, giant REITs. Okay, they could pay you like maybe 5 to 10% dividend yield. Right? Even the market could be up and down. This is as if you're collecting property rental. So for a property investor, why they are not borrowing? Why this month the property price could be up or down? Because they can collect the this so-called property renter, right? So that's why they are not so frightened. Okay, so that's why as an individual, each of you need to actually form your 10 dream team stocks. If you run out of idea, all right, you can download one of my ebook. Has one sample portfolio of the dream team stocks with 10 sample strategies for 10 sample stocks. Okay, but more importantly, right, you need to come up with your own stock as well, aligned to your unique personality. Okay, before that, let me introduce the optimism strategy. Okay, optimism actually is a technique, right, to show the up and down, the greed and fear, but that requires firstly, right, the understanding of the intrinsic value. So this is Dr. T Yan 55 intrinsic value. Once you identify this middle line here, right, you can actually draw 5 lines. The lines from 0% optimism all the way to 100%, right? So from here, right, you can take action, whether for the stocks, property, forex, or whichever. And there are certain rules you have to follow, right? So although here I may not be able to show the details due to time constraint, in future you have chance you can learn from Dr. T, the free course every month, right? With more details, not limited to optimism, but at least 10 different strategies. Okay, for example, right, the best time to buy stock is during winter time and sell during summer. Of course, it's not the real 4 seasons. I mean here, winter people frightened, right? It means the winter of the stock market means when people are bearish, they're afraid of buy stocks. They stay at home, they do nothing, right? They regret of buying stocks. Likely there's a time they lose money, right? That could be a good time to show hands. At the same time, like in USA, when the market is bullish, right, people think, this is the best time ever, right? They counting money every night on their profit gain in a quick way from the stock market, right? But unknowingly, right, in fact, the days of the bull run could be, right, limited, numbered. So you have to actually watch out, right, the cyclic effect of these two extremes. But exactly how to do so, right? So application I'll show to you, but more details, just remember it's not as simple as draw 5 lines to make decision. It's not that. It's not like some sort of technical channel. It's not like a technical analysis as it is. All right, because whichever you think likely is wrong. All right, because the optimism technically is a 1/3 fundamental, 1/3 technical, 1/3 personal analysis. So that's why this is a unique technique, right? Through Dr. T, 20 years of observation, right? Experience with the stock market. Okay, when you wait for the giant to fall down to here, let's say low optimism here, less than 25% potential to take action, your upside is actually 75%, but you got risk, it may fall down by 25%. So it's called the reward to the risk ratio. So in fact, optimism is a probability calculator, right? Use the up and down here to give you the unfair advantage. But remember, buy low, not necessarily always go up. The condition, it must be a giant. That's why this is very important. You must know the giant definition. You must know the intrinsic value according to Dr. T criteria. Right? Otherwise, you could buy a lousy stock. You could buy a junk stock, buy low, get lower, buy cheap, get cheaper. Okay. So this is some people thought long-term investing is good. No, long-term investing holding a junk stock, it may drop down, forever, eventually go bankrupt. The key is to buy a strong fundamental stock and hold for long term. Then that is the value investor. Better still, buy a strong fundamental stock at lousy price, okay, and hold for long term. But Dr. T, if it's a strong fundamental stock, how can it drop to a lousy price? Usually it will not. Only when people are not rational, when people are frightened, when people hear from the news, they read the social media, they say this could be the end of the world for the stock market. Right? They will look for the nearest exit. That is the time the best to buy. Right? Later I'll show you that the potential opportunity for the whole world, but that require a lot of patience to wait. Whether you are short-term trading, a few months, a few weeks, to long-term investing, even lifetime investing, you can apply this technique, right? Because the strategy for optimism, especially if you combine this technique, optimism is just one of my 55 styles. If you can combine with the rest of 54 styles, the winning probability is even higher. Okay, without further ado, let's proceed with our important topic of global market outlook. Right, this is based on the data available as of today. Right, so today is the 21st of February. So I use the last available data up to 20th of February. Okay, so similarly, right, you need to actually so-called monitor the market from time to time, but at the same time, right, able to make some informed decision. But before that, you can go to Dr. T website, en55.com, download these two free ebooks. This is a 10 Dream Team stock Dr. T mentioned just now, but it's just a sample portfolio, right? It may not be suitable for you, right, if you have different personality. So that's why it's better to learn the flexible way. Then you can form any portfolio aligned to your personality. At the same time, I have another ebook on the market outlook, right? Usually I will update once a year, right? This version is 2020, right? By end of the year, then I'll update to the so-called the next version. You can go to my website, 2 minutes, you can get two ebooks for free. And then one more bonus, you can go to Dr. T Facebook forum. It's a private group, but just follow the website here to click and join, but please wait for 24 hours for Dr. T to give you the permission to join, right? And this is a purely educational forum, right? Please use it meaningfully, to actually learn about the stocks and the rest of the investment like property and the rest. Okay, let's proceed here. I'm going to show you the outlook for the whole world. Singapore, USA, Hong Kong, and China, right? These are the probably the five important this market we're interested. Okay, the whole world, right? Your Singapore airline cannot affect the whole world, but whole world can affect your Singapore airline. So that's why it's important to look at the whole world stock index. So right now the whole world is at the 82% optimism. So what's the optimism meaning? Zero. 25%, this is a scale of it, 50%, 75, 82, and 100. So it means based on probability, there are 82% chance it may fall down, but there are still 18% chance it could go up. Okay, it doesn't mean it must hit 100% to fall down. In fact, the last highest optimism was in the year 2000 before the dot-com bubble, right? So in fact, the current one optimism is still lower than the year 2000. right? It means that if today you're a longer term investor, your probability is against you. But this could be a good news for a short-term trader because usually during the last phase of bull run, right, the market could go into the euphoric stage. But you must learn how to buy high, sell higher. Otherwise, when the market actually reverse, right, you still hold on as you see going in as a short-term trader, exit as a long-term investor. Probably need to wait for 10 years to recover the price, and this is a case using the whole world as a defender, you're probably okay. What if the stocks you have is a weaker foundation, right? What if your stock is a junk stock? It may not be able to come back. Probably during the next winter, let's say the next global financial crisis, it could be game over, right? You can join Dr. T, probably the next free course, right, to learn how to time for the next global financial crisis, right? There are certain criteria need to fulfill, not just the optimism itself, but this is actually a not very good signal, right? To a short-term trader, this is a very good news, but for long-term investor, all right, it signal you is a summer time, so you need to plan for your exit strategy, especially when you buy like a US stock and so on. So every roughly 10 years or so, but not exactly, right? It's determined by optimism. We already exit more than 10 years already, right? The last peak was the year 2007, and this year is the year 2020, already 13 years overdue, right? So that's why be careful, right? The next crisis could be opportunity for whoever are prepared for that, right? But this opportunity, when it come, probably every 10 plus years, but you no need to wait for just that, right? Later I'll show you, you can also look at medium term and short term, right? Medium term, all right, not medium term, but level three. This is the next level, country level. Just now was the whole world. Okay, for long term, we usually look at probably a few decades, right? So for USA right now, optimism is 92%. Again, this is still lower than the dot-com bubble in the year 2000. But the 92% is a very, very high optimism so far. In fact, it's the highest in the last 20 years, right? Other than the year 2000, right? So that's why many technology stock also shoot up, right? So you can see Nasdaq actually go to sky high. Yeah, so that could be a good news for short-term trader, but you must know the exit plan, so which is important. Otherwise, this potential fall down, right, could be very risky. 92% risk falling down, 8% upside. Again, it may not be just limited to 8% here, but it tells you, right, year 2020 is very crucial, right? So nearly always the market, go to the euphoric stage and fall down due to the fear, right? So if you are not the seasoned investor, right, you need to actually learn exactly how to position, right? How to sell first and then buy back in future when it fall down again. Recycle your cash or capital. Okay, of course, it's also possible to buy and hold as a lifetime investing, but may not be for stock indices. Okay, in the future, this is a free money course. Dr. T will guide you, right, how to do actually lifetime investing and what are the criteria are involved. Okay, at the same time, medium term, could be shorter term time frame, right? So this is probably 1 or 2 years time here. So after like a year ago, right, at the lower optimism here, right, the market USA recover right now. In fact, come to the midterm, nearly high optimism for midterm as well, right? Despite the coronavirus, the looks like scaring for the Asia market, but why it's not scary for this USA? Because USA, the seasonal flu, right? There are more than 10,000 people die a year, much more than just a few cases for the coronavirus. Yeah, that's why the fear for coronavirus is not justified within USA. Okay, in fact, people could be greedy to buy more, buy high, sell higher. Okay, yeah, but always remember, right? The market will not be forever rosy, right? You must know when is enough for each of you. Okay, at the same time, short term is a shorter term period. So each of the short term, medium term, long term, right, can be applied for different personalities of traders to investor. But optimism is just one of the integrated strategies, right? We cannot just apply optimism as it is, right? There are still additional steps you need to follow. Just remember that. But good news is USA short term also bullish. You see uptrend here, right? Mid term bullish, long term bullish, right? So that's why with this alignment here, right? So that's why one of the best market for short term trading at the current moment is actually USA, right? Later on we look at like Singapore may not be so suitable for short term trading, but US is more suitable, right? Due to the fact, alignment to the level 3 over here. Okay, currently the optimism is 61%, moderate, not low, not high. No, so it means probably quite close to the fair value, right? Fair value is around 50%, right? So, but at the same time, right, the market will continue to, every few months to break new higher until there's a new low, right, coming. So that's why short-term trading, you need to actually monitor the market almost like every day or every week minimum, right? Otherwise, the reversal come, right, you may not be able to prepare for that. Okay, for Singapore, the long term is actually around 42% optimism. In fact, Singapore has been at the mid optimism for a long time, probably nearly five 5 years or so. So that's why if one person just invests in Singapore index, right, that the waiting time could be too long, right? So Singapore index is okay, 30 STI, but it's a moderate growth, right? In general, you can consider it's still a giant, right, for the index, but at the same time, this so-called the opportunity could be limited, right? So that's why it's better to look for individual this Singapore stocks if you are interested. Okay, there are probably 700 to 800 Singapore stocks, right? If you can carefully choose, probably a few of them to form your global portfolio and take a few from USA, a few from Southeast Asia, and so on, right? To actually form a stronger portfolio. Okay, and all may not be at the same time today, right? You can wait patiently, right? The giant will fall down at different rates. Okay, so conclusion, you can wait for the giant to fall down. All right, every 10 years, this Singapore giant will fall down, but not yet at the moment. Okay, but if you are not patient enough, can you wait for 1 month, 1 year, 10 years? Okay, the good news, you probably not need to wait for 10 years. All right, because the last peak was the year 2007, already 13 years from now, overdue, right? So that's why this year could be one of the best time, exciting moment. Although the market is very volatile due to the fear of coronavirus, due to the U.S.-China trade war, although now temporary ceasefire, right? Due to the worriness, right, about the uncertain market, right? Worry about the U.S. presidential election in 2020 by end of the year, for example, right? Remember, stock market, right, will digest all this information and then will come out with a way. So that's why optimism is one of the 55 styles, right, can give you that unfair advantage, but it's not the only way, right? So we continue from here on medium term, right? Singapore medium term, good news is still uptrend, but the relatively low optimism, 26%. But it's not bearish, it's still bullish, right? So it means if someone invests for medium term, right, the market is still all right, but it simply will not fall down, but it will not like go up tremendously as well. So it's a very painful waiting process over here. Yeah, so that's why for short-term trading, some may not like to trade the Singapore index because of that. How about for short-term? Short-term, not bearish, not bullish, sideways. So in fact, for trading, right, uh, a good trader would like a clear trend, whether clear trend up or clear trend down. Either way is fine because downtrend can do shorting, uptrend can long. So this is the market which short-term trader, right, dislike because you don't have a clear signal. It's just wait, wait, and wait. So that's why for Singapore traders, you have a choice to consider like overseas market like Hong Kong, like maybe in USA and so on, right? Or you have a choice, you can take a rest. Yeah, so you don't have to forever every day do trading, right? Wait until the trend, right, is reversed, right? Or there's a certain maybe like a breakout to higher, right, with a stronger uptrend, then you consider to go in. Okay, at the same time, Hong Kong, right, optimism is roughly close to around Singapore, 42% optimism, right? Previously, we have the so-called protester in Hong Kong, right, causing the low optimism. Later on, this new this fear is overtaken by the new fear of coronavirus. But still, the market is still quite resilient over here, right? So in a way, Hong Kong and Singapore, I think, are to quite close together because they are affected by the two world, the Western world, USA, which is bullish, and the Eastern world, right, this is China, which has been bearish. So bullish plus bearish. So conclusion, mid optimism, right? So that's why for those smaller countries, especially third world, are usually affected by the number one economy, USA, and also by the number two economy, this China. Okay, China, the contribution is getting stronger. Last time in the year 2003 during the SARS period, all right, they only contribute to the whole world 5% of the GDP. But with the current their strength, they can contribute to 15%, 1/5 of the whole world GDP. That's why this time the China tourists cannot travel out. All right, it actually hurt a lot of country, like in terms of tourism, including the like the luxury, consumer products and so on, because a lot of those dependent on the China, right, tourists with the high, consumption power and so on. Okay, we continue over here. I just remember the good time for Hong Kong is also not yet, but could be coming. All right, so we need to monitor very closely in the year 2020. How about for medium term? Very close to Singapore. Medium term is still uptrend, all right, near to the low optimism. In fact, so far, I think Hong Kong and Singapore are quite close, both long term and mid term. But short term slightly different because short term, Hong Kong is more bullish than the Singapore. You see, all right, Singapore early on was a sideways trend, but the Hong Kong at least some uptrend over here because Hong Kong, some individual stocks start to actually come up, huh? And some China stocks which form the so-called the H share component, right, contribute to the Hong Kong Hang Seng, right, also helping Hang Seng actually to go up higher. So currently the short term and the mid optimism, just remember, right, the short term and mid term, right, they're always a cycle. Yeah, so there's no regret to, for example, to sell first and then the buyback again, right? But it's a test of the greed and fear, right? Because some who actually sell, they may think they could sell too early, right? But at the same time, if they don't sell when they fall down, they feel regret. Yeah, so that's why by not knowing the future is always a pain for trader investor. Always remember, optimism, right, is a technique, right, to actually do a calculated risk analysis, right, but it cannot tell you the future as well. Instead, in making use what we have known today, is it a giant? Is it the so-called uptrend, downtrend, and many other considerations, right, to form that 55 styles, right, to give you that kind of a so-called probability, right, for the future. Yeah, so that's why probability investing or trading is an important consideration. We cannot just simply guess. Guessing is as good as a gambling, right? So that's why each of us, right, it's good for us to learn something from here. Okay, how about for China, the parent market, right? Long term has been a low optimism over the last 1 year. By right, want to start to climb up already, right? After the US-China trade war has ceased fire, but the latest coronavirus has actually correct down one more time. But now, right, start to actually climb up from valley one more time. Okay, hopefully this round there's enough energy for this dragon to recover. Right, the China is a bit different with the whole world. Whole world usually a cycle is roughly 10 years or so, but for China, the cycle duration is shorter, probably every 5 years or so, roughly. Huh? Why? Because the China market is more cyclic. Right, 80% of their trade volume is probably by the retail traders. Right, unlike the rest of the world, mostly by the big funds and institution. Right, So big funds, they are more rational, right? So that's why unlikely to buy or sell follow the emotions. But for the retail traders, they may not be. Huh? For example, even after the crisis for the coronavirus, you can see here, this is correction in the medium term, but it did not fall down a lot. Yeah, because with the this so-called the precautionary measures within China, right? They somehow can control the cases within like China Hubei, right? So in fact, the current this number of infected cases are dropping. That's why all this are giving encouragement to the stock market, right? So that's why it's rebound. Medium term, a little bit of bearish signal, but with more time, it should actually become more bullish. Let's look at short term. Short term, in fact, after you see China actually rest roughly for probably close around 10 days for the Lunar New Year, normal stock market, when it's reopened, one day it dropped by roughly 8%, right? So there's a correction due to accumulation of the fear for coronavirus, but after that, it start to recover. Huh? So this is an important signal. It means that there's unless there's a new fear, there's new unknown, right? For example, let's say there's a second wave of the coronavirus, which is uncontrollable in the China. Only then this has the pressure to fall down, right? But with earlier technical analysis on coronavirus, so we can see that when coronavirus are falling down, right, the stock market, right, index is going up because it's a reverse in the direction, right? So yeah, technically, probably you can treat, probably like coronavirus almost like a VIX, VIX index, volatility index. Yeah, so basically when the infection number drop down, right, people actually less worry, something like that. If you want to have a better understanding. Okay, so conclusion, even China short term is more bullish than Singapore, although China suffer more than Singapore. Okay, of course, today I don't have chance to like talk about the forex. You can also analyzing like forex, Sing dollar right now, for example, versus the US dollar. Singapore dollars becomes softer right now. Why? Because of the fear of the cases in Singapore. So that's why the investor fear not only reflected in the stock market, also in forex, property, commodity, and the rest. So that's why mastering all this technique is important. Okay, so I also want to touch a little bit on the value investing. Right, so far it's more on the technical analysis, the optimism. Value investing is something worth our effort to learn. Okay, otherwise Warren Buffett could not be so rich. Consistently, right, make money from the stock market, but not in terms of days to day, right? So there are generally right three strategies over four types of stock, right? Dividend investing, right? You collect the dividend as a defender, right? Through either REITs or non-REITs, right? There are 40 REITs in Singapore. There are probably hundreds of REITs globally. How to select them? How to do stock screening, for example. Non-REITs are those dividend stocks, right? They have, let's say, a clear dividend policy. They probably pay maybe 5 to 10% dividend yield, consistently every year, but they are not REIT, right? REIT by law, over 90% of the rental income must pay back to the shareholders in the form of dividend. So that's why people like REITs, but people may not know that they are actually junk REITs. So do not buy junk REITs, okay? And also do not buy just average REITs. We must buy strong REITs, buy strong giant stocks, strong dividend stocks. And dividend stocks, in fact, are not just for dividend purpose. According to the past, nearly 100 years of studies, right? Whenever a stock is good for dividend investing, you also can enjoy capital gains. But let's say we purely focusing on the capital gains here, means the stock may not pay you a lot of dividend, right? There are two main strategies. One is called undervalued stocks using asset approach. For example, you can look for property stocks. You can look for a company with a lot of cash. How to do so, right? In an exact way, how to do stock screening. And the growth stock, how to look for company, every month, every year make money, right? So even crisis come, right, the strong economic mode can still support them. So that's why this is, I would say, the minimum each of you should actually master for the value investing because it's something important, right? Of course, if you can combine with like trading for short term, that'll be good, right? Okay, so value investing is also part of the fundamental analysis. All this you can learn from Dr. T, this online course, right? So some you, if you either stay overseas, then you may not have chance to come for Dr. T, the free monthly workshop. Then you have a choice to actually attend the online course here, right? The course fee, regular course fee is $100, right? Dr. T spent a lot of effort, right, to share this three strategies of four different type of stocks, show you exactly how to do a stock screening. Is stock over here, just $100. But today, right, to help all of you here, even you can learn from home, there's a 75% discount, only $25. How to discover giant stocks? Okay, mainly using the three value investing strategies I mentioned just now. Okay, so you just follow this link here to investingnode.com. So probably later on I'll see whether I can add a link below the YouTube. Then you can click on it. If not, please copy exactly the wording here, and then yeah, over the website through the platform here you can actually pay by online and so on. So this $25 is not for Dr. T, it's just helping this platform to maintain it because they put in a lot of effort. They're helping Dr. T to host this online course there, right? So help them to become sustainable. And the best thing, you can also share the same video link within your family members. Let's say you have younger children, right? Want to have a good start on value investing, right? This online course with 9 modules can give them a good start. Okay, and after your all learning, please write some review. Hopefully, it's positive, right? To help others, encourage them to sign up. Okay, this video, right, for you to listen clearly, right? So you need to actually uh, adjust your volume a bit higher because I want to reduce the background noise. So usually I will actually, same as this video here, I'll lower down the this sound volume. So you simply increase the, let's say, your YouTube or whichever your PC sound volume, then it will be okay for that. And technically, as long as investingnode.com platform is still there, this will be a permanent so-called learning this website for you. So it means after you learn, you can actually every few months you can still come back, for the update and so on. In future, if Dr. T update the course material, right, you don't have to pay extra anymore, right? You can actually learn from there. Okay, so much on this online course. And whoever you're in Singapore, then you're lucky. Why? Because Dr. T will teach you 10 strategies here. Dr. T, may I know how much is the cost? All right. Firstly, what are 10 strategies? Buy low, sell high, including like just the optimism strategies, but not limited to stock. You can apply even for property and the rest. So this is a 4 hours course. You learn a lot. Okay, more outlook, both the bull and bear market. At the same time, I'll show you what are those fund managers, those so-called big boys, Temasek, Dikashing, Warren Buffett, how to apply their strategies. At the same time, what are the high probability shorting strategies? Shorting means when the share price fall down in the bear market, you could make money there. And how to do dividend investing, especially through REITs. How to do spring cleaning, especially when market at a high optimism. How to sell first and then buy back again in future. What to buy, right? When to sell and so on. Fundamental, technical, and personal analysis with optimism, right? Although I could not share all the 55 styles due to time constraint, right? More details than this short course over here. You can learn in the 4 hours, and it's absolutely free. Huh? Okay. More importantly, it's educational in nature. You will not be regret for actually coming to this class over here. Okay, by then also will update the latest market outlook, right? Although today you have the outlook as of the February, the next round I will update the next month of the outlook in the meetup session. So how do I register, and Dr. T, how much is the cost? The cost is free, right? Although I must say that it really worth $500. Okay, so you can go to my website ein55.com. Right, not only download the 2 ebooks, you can register online. Okay, so my website will update once a month, right? Because I only conduct one workshop every month, right? So you can look for the details on the venue, the so-called the dates and so on, right? It'll be different every month, okay? Usually in the evening time, but come earlier, let's say around 6:30 p.m. if possible, for the stock analysis. You can name one stock of your choice. Dr. T will actually help you to analyze it for educational purpose. And then starting from 7 o'clock until 10, then we'll go into details, on the learning of 10 strategies. Okay, the focuses probably a bit different each workshop, but in general, right, you'll learn the details of 10 strategies. Then I'll give you a bonus also on the global stock screener, how to position for that. Okay, I think probably that's so much on that. So I would like to wish everyone a good health. At the same time, right, hoping the coronavirus will be over quite soon, right? And whichever we can, apply for the analysis, both the coronavirus and can be applied for the stock market as well. So just remember, right, everything there's a probability. Don't be too fearful, don't be too greedy. And the opportunities are always there for whoever are prepared, right? So for example, today, right, it's your choice. You can do it within 1 2 minutes time. You can go to my website, download the two ebooks, right? Straight away, today you can start learning already. And even you cannot come out, assuming you stay at home for the next 1 2 months, you can join my this online course, right? 75% discount given to you, $25, $25 to learn a 9 module course given to you, huh? And you can share with the whole family some more. Okay, and if you don't want to pay a single cent, right? Even you can come to Dr. T, the meetup session, right? Register over here. The content you'll learn in the 4-hour course in the meetup will be different from the online course. Okay, it's a two different modules. Okay, until we meet again, right? Thank you for your attention. Right, bye bye.